Well, I wanted to forestall some of the fears about bank closures. I've been hearing about some of this stuff coming up because of the government shutdown and the debt ceiling not being raised, for to keep everything open and meet their debt obligations and all this type of stuff. There's not going to be bank foreclosures and closures and all this type of stuff and runs on a bank. That will not happen. That could happen sometime in the future, but it's not going to happen this October. But what I can give you, as I think in a reasonable certainty, and I'm not going to make a bet this way, but the markets I think are going to tank in October or very soon. It could be next week, that quickly. Because the assumption was that this would be all resolved. It's all smoke and mirrors. They'll come to the table and all this kind of garbage. There'll be a meeting of the minds and they'll resolve it. So it's all talk. But as the situation continues, it's going to come to the realization that actually if the government actually shuts down past October 17th, there's going to be a large percentage of the GDP, gross domestic product, that's going to be severely affected. Plus, the Federal Reserve doesn't have the numbers because of the shutdown. A lot of things, because the government actually is a large part of the economy. That's just how it is. So, there's a lot of things that are up in the air due to this. But there's something else that a lot of people aren't thinking about, too. There's raising the debt ceiling and there's government shutdown, right? Those are two separate issues. A lot of people assume if they raise the debt ceiling that the government will reopen up. That may not be the case. So they may just raise the debt ceiling to meet its obligations so there's no default and that type of stuff, but the government may stay shut down. Because there's a lot of problems where, there's a lot of argument over, not just Obamacare, but a lot of stuff that's going on. And it's not going to be ironed out that quickly. So they may raise the debt. The likelihood of raising the debt ceiling is pretty good. But the likelihood that the government shutdown may go on for longer, quite a bit longer, that's more likely that can continue on. But that does not mean there's going to be bank runs. That's ridiculous. I know there's a lot of people out there pumping silver and gold saying there's going to be bank runs and all this kind of garbage. That's not going to happen. But what probably will happen is a severe stock market correction. And, I know about I've been saying about the George Soros bet. It's a large bet. He made it in August. And there's a lot of indications out there. There's 6 Hindenburg omens that's actually taken place already. And, the last time that happened, when there were 6 Hindenburg omens, was before the 2008-2009 financial crisis. Now, these are more factual things. As far as like you going to the bank and all the banks are closed and there's a bank run and there's be a bank holiday and you go after everybody's 401ks. There's a lot of that garbage being thrown around. And that may happen at some point in time, but it's definitely not going to happen in October. That's ridiculous. That's beyond ridiculous. And I have to just throw that out the window. But as far as a severe market correction, yes. But does that mean gold is going to go down? No. Because those are actually the conditions for gold to go up. It's almost like the fear factor of, where's the safety? Where's the old time safety? It's an archaic relic, but, in times of severe stress, gold has always been the safety. Silver, it's got two hats. It's an industrial metal, so that's related to the economy. And if the economy looks like it's bad because of this government shutdown and a large percentage of GDP is going to be affected. But I would tend to think that silver is actually going to get a little bit of a boost because it's more going to be in line with gold, a little more in line with gold than the industrial hat. I think now that silver's actually been advertised so much for the last 2 or 3 years so heavily that more and more people are becoming aware of it as an investment than they used to be back maybe 5 years ago or 10 years ago. So, there may be a lot more investor demand for it too. This crisis could bring a lot more investor demand for silver. And the other thing is, we got little things like, not too really little, but, India raised the tariff on gold and lowered it on silver. And they're major buyers of precious metals. So, and the market in silver is very small too. It's much, 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 much smaller than gold. And that alone could drive it up pretty quick. It could do some crazy stuff, So I don't think this crisis is actually going to be bad for silver either, but it should be definitely good for gold. Even it's not going to be good for the equities markets. I expect within the next 1 or 2 weeks, I don't think you're going to resolve this right away. It's almost like the opposite happens because people, what they tend to think initially, it's like the analysts and everything thought it's going to, the big media and all that stuff thought it would be resolved right away. They're not going to, they'll call their bluff and they'll just raise the debt ceiling and reopen the government and they'll be all smooth sailing. It's almost like the opposite happens. It's like when you think the situation's really bad, sometimes it isn't as bad as it is, as you think, and then sometimes the other way around. And right now the markets aren't reacting because they think the situation isn't serious. But as the time goes on, they're going to realize it's serious. And then, again, I just want to say it is that they could raise the debt ceiling. That's priority because they're going to have to meet the obligations to the bondholders. But they could still keep the government shut down. They could still do that. So, but that doesn't mean that there's going to be bank runs throughout the United States. Now, actually, I think it was September 28th, 2009, there was an electronic run on the money markets. But they fed enough cash into the system at the last minute to avoid a collapse. I just can't see there being any kind of problem with that. The only thing I can see where there's going to be a problem is if people demand cash and that it can actually affect the economy. But as far as them running out of cash, I just can't see that. I just can't see that because they'll just pump more cash into the system. The problem is with that scenario is that there's unlimited amounts of electronic and paper cash, which to me, simple 101, supply and demand. There is not unlimited amounts of physical silver and physical gold. So, I'm neither like 100% on the side of the fiat pumpers or the drama freaks in the physical silver world because I do not think they're going to close down the banks, and the banks, there's going to be an electronic bank run, and all that. I just can't see that. There's no reason for that right now. Not right now. But there may be a panic selling in the equities if you're seeing it drop fast. Because, today, with electronic trading, as markets go down, people could just hit a button and get rid of it and dump it. Or short the market because they feel it's going to go further down and drive it even further down. But that would not be the situation with gold and silver. So, we shall see. This is going to be an interesting situation because, like I said, it's that they can raise the debt ceiling and the government could still say shut down for a lot longer past when they raise the debt ceiling. Like the likelihood of a default is not going to happen. That's extremely unlikely. But the shutdown of the government can continue on a lot longer than expected. So the situation's going to actually hit the markets. But it's not going to hit the private banking system and all this kind of garbage. We're just saying, we got to take our cash out and all this kind of crap. Because even if it did, the government is going to come to the rescue. They got plenty of paper and electrons. They could just snap their fingers and produce more cash and have it available for wherever the supply is short. You know, one of these days the people are going to wake up when they see silver and gold as a safety, and the supply is not going to be there, because there's one difference between physical silver and physical gold and electronic money and paper money. It's like it has to be mined, and it takes a while to process it. So if that asset has actual value, and all of a sudden people are demanding it, it's not like they can just snap their fingers and create a hell lot more. It's simple 101, right? And eventually that's going to really drive the price up. But for now, just beware of the drama that's overblown about bank closures. But I think it's a pretty damn solid bet that within the next couple weeks, we're going to see a major correction in the stock markets. That you'll probably see.